Afternoon. How are you all doing? How's everybody? Afternoon, Steve, Baggy, Burke, Fletch, Lucas, Harris, Amy, Crum. How are you all doing? Not a lot of movement today, is there? A bit rubbish. Well, I suppose there is a bit of movement. But I was expecting a few more ADRs than we've got, but hey, not a lot happening particularly. So the news today with the let me just move screen. News today, we've just had Lagarde speaking at 2 o'clock. We had the CPI figures for the Swiss came out this morning, obviously, as we saw. Out of Lagarde's speech, there wasn't anything. So, well, there was, but the only thing that's sort of highlighted, really, there's no clear evidence that underlying inflation has peaked, which is obviously bullish for the euro. So they're just saying that we haven't got to the top of the inflation. Therefore, we're probably going to put our interest rates up more. But nothing out of that. I was expecting a little bit more, hopefully, for bullishness of the euro. But we had a little bit of a rally on the euro pound, mainly because of the pound weakness. But as you can see, euro's come down against the odd. It's come down against the CAD. Not gone anywhere against the Swissy, but down against the yen, down against New Zealand. And pretty much the same for the US. So didn't really rally that at all, did it? So there's 3 ADRs to look at. Just have a quick look at the strategy results so far. ADR reversals, 1.19 yesterday, 0.5 today, 1.56 drawdown. So that's all doing pretty well. It's obviously early in the month. H1, 0.5 banked today, 1.3 yesterday, 6.25 drawdown at the moment. Aussie dollar, New Zealand dollar. That's obviously not gone anywhere so far today. So same as this morning. H4, RSI extensions, 3% drawdown on Friday, 0.5% today, sitting in 12. Again, nothing's really gone much further against anything apart from Aussie New Zealand, which was about the same this morning. It's a little bit worse actually this morning, Aussie New Zealand. And H1 hedging, 0.13 banked, 3.36 on Friday, 13% there. So nothing particularly drastic there apart from Euro US dollar at the moment. But nothing's really gone far today. So we've got 3 ADRs to look at. So far, what's the time? Quickly go through the ADRs before the market opens. So Euro Pound, that's an ADR hit to the upside. We've had the 5-minute reversal already. Beautiful M pattern. So there's your ADR. M pattern reversal. Hopefully coming down. Pound obviously has been very weak, so might get a bit more strength coming through on that, but that's a nice reversal there. I got out of the EA got out of the hourly RSI extension trade this morning. There. So that's Euro Pound. We've got the Pound Odd and the Pound CAD. So as you can see, it's all pound related so far. So Pound Odd just hit ADR, so you can drop down M5, wait for a reversal alert on that one. That's just come down like absolute crazy today. Already got one long position on, done some drawdown control on that one this morning. Yeah, ADR reversal, but kind of still in this uptrend, obviously. It's just quite a big drop and a fast drop, which is great because 4-hour RSI is extended. So that's really nice looking level for bounce. We looked at these levels this morning, these weeklies. So 150 ADR is kind of where you'd expect to get a bounce if we don't get some kind of pullback before we get there. And then we got that monthly triple bottom low at 175 to 200 ADR. So two good bounce points coming up if we do continue to get extended on that Pound Odd and Pound CAD. That one's extended as well. Just tweeze the bottoms off of ADR. Reversal hasn't triggered just yet. It's about to. So potential entry on Pound CAD as well. So we might get some retracements on these pound pairs. DAX this morning didn't really do much. Opening ranges this morning, opening range breakout was along, but you couldn't really get onto it. The volatility this morning, well, I couldn't get onto it anyway. The volatility was too much this morning. Just absolutely flew. I think I had a connection problem at the same time. So So big move to the upside on that one, came straight back down and sat exactly where we opened, which is where we are now. Not gone anywhere. So looking at the Dow, we've had a bit of movement on the US indices today. Let's look at them on here. And we've got 3 minutes. So the Dow, basically, we had a bit of a drop today. It looks a little more drastic on the 5-minute chart when you look at it like that. But yeah, it's dropped all day, basically. It's just starting to push back up now, but we've had a gradual drop all day. Big move on Friday. So chances are we'll probably get a drop on this today, but we'll see. That's obviously up at those recent highs from there at the moment, which is kind of what's getting rejected out of this propulsion gap. So if we're going to continue on our little downward spiral, that's where we should really start at least a pullback or a drop from. So good looking level there, very nicely extended on the hourly, so it looks good for shorts today. Same with the S&P, big extension, and the NASDAQ, big extension. Well, it was a big extension on Friday, but it's kind of gapped down a little bit. So difficult to tell, obviously. NASDAQ's well out of sync with everything else at the moment, so we'll see where everything goes at the open, which we've got in 1 minute. Afternoon, everybody else. Amy, Brian, Virginia, Lusek, are you just leaving the EAs running on a bunch of charts, or do you use the Bootcamp process? Yeah, no, I trade Bootcamp. Well, that is the same thing. The EA is running on all charts at the moment, trading the strategies in the Bootcamp. Yeah, this VPS is running all pairs, basically, just so we can see every single trade, every single opportunity taken by the strategies, basically. The idea being, and it's not really working out, to be honest, the idea behind me doing this was to help people. Nobody seems to want any help. So there you go. So basically, I set the EA up so that it could take every single trade and show everybody every single trade that's going on, what it's banking, how it's working. And anybody that says, I'm stuck in XYZ, what strategy are you using? This EA should have taken those trades. But nobody seems to be wanting to help on anything. So I assume everybody's just sitting there making money, which is great. But yeah, this is just taking every trade. Obviously, you would limit your drawdown. There's a 5-minute pre-market. Oh my God, I missed it. So we have gone long on NASDAQ. That's it. That's the only thing that's broken at the moment on the pre-market 5. NASDAQ long. That's quick. Sorry, one sec. So TP, is that TP? No, TP's there. TP1, TP2. So NASDAQ's broken long. S&P's not gone anywhere yet. Now we're long on the S&P as well. Short on, excuse me, the Dow. So if a difference of direction there. Sorry, bear with me a sec. I'm just trying to trade this as well. Okay, so Dow short. Stopped out on the S&P on a trailing stop on those longs. So a bit whippy on the S&P. Dow's going very nicely, almost at target. NASDAQ also going very well, nicely, almost at target. Not quite. There we go. So Dow's just popped out those lows. Let's see if those lows hold, pre-market lows. Steve, the EA running on your VPS showing all strats. Yeah, that's the idea. Okay, NASDAQ target hit. Dow, Come on. That's going to be nasty if that doesn't hit that target. Come on. Look at that. That's the low of the candle. There's the target. Come on. Oh my God, look at that. Horrible. S&P is just trying to break out the highs as well, again with the NASDAQ. Okay, 1 minute 40 left on the candles. That's not going to hit, is it? I'm going to let this just play out, but ordinarily I would be closing that there. This is struggling to get through the Globex lows, basically. And the fact that the NASDAQ and the S&P are all trying to fly, I think this might get taken along with it, but we'll see. Wait for this to close. I've got 45 seconds. Afternoon day trader Fex UK. The EA is running the VPS. Yeah. Are these live accounts or prop firm accounts? These are demo accounts. This one is a demo account. Just testing a new breakout strategy, basically. That's going to stop out at break even. Very annoying. Still, so we got one stop out on the S&P, unfortunately, on the trailer there. Dow's holding at the moment. NASDAQ is a nice TP hit. That's guaranteed to make profit. Three. So I'm just trying to get some trades on and I can't place them. I'm just trying to figure out why. Got a lot limit. Okay, so they've stopped out those shorts, unfortunately, at break even. That's a real pain in the backside. NASDAQ looks like it wants to go long still. S&P's just popped out new highs. So we're going to flip long on the Dow. DAX this morning, by the way, did get those shorts triggered. For those of you in the live room this morning. So we missed the opening range breakout to the upside, which would have been $1,500 profit. Because it just didn't trigger. Broker. The shorts triggered, didn't go anywhere and just stopped out basically. So the DAX made about $1,000 loss. We've got that back this morning easy on the NASDAQ. So and the Dow, that was $1,500. Look at that. Unbelievable. There's the TP. That's the low of the candle. The difference between $1,500 and a break-even stop. Literally nothing. That's as close as it gets in scalping. NASDAQ second entry is about to stop out break even by the looks of things. Okay, break even on the second entry there. So break even at the moment today. So the DAX basically made that loss this morning. Would have made about $1,500 if the long had triggered, which is annoying. S&P stopped out on that short, and then on that long rather, and then immediately went up and hit target, trailing stops. NASDAQ banked $2,000. Dow break even, although it did give you $1,500 at a point as well. So overall, bit of a break even one today, isn't it? But we'll see. If this market rejects up here and decides to collapse, we'll get triggered short on the NASDAQ and the S&P. And we'll get triggered long on the Dow if that decides to rally. So the session's not over yet. See how that goes. We'll leave that to run for a minute. Right. So there's your ADRs, which we've kind of covered. We'll have a look at the RSIs. I'll catch up on chat first, though. Usek, I mean, in the bootcamp, you taught us to screen the charts to see if certain conditions are met, then put the EA on the chart and let it run. Or could we just fix open a bunch of charts, put the EA on all of them? Yeah, that's exactly what I teach in the bootcamp. Well, there's two ways you can do it, isn't there? You can either put the EA on every single pair and then let it trigger your trades, and then when it's triggered enough exposure, you can then turn off all the other pairs, or you can monitor, put it on. These are demo accounts, yeah? So total transparency, this is not real money. I haven't got 400 grand available over 4 accounts. Wish I did. This is all demo accounts, right? So the purpose of these accounts is to show the EA and the strategies trading in action every single trade they take. Good, bad, ugly, crap, drawdown control, blowing accounts, anything you want to see, basically. It's all done here. Yeah? My account, right? I don't do this. My account, I do exactly like I teach in the bootcamp. I limit my exposure to 2 trades in one direction. Yeah. Otherwise, if we get a squeeze and the Canadian dollar, for example, goes 10 ADR up, this account's blown. Yeah. Total transparency. I'm in here every day saying the same thing. So that's what this is, right? This is not real money. Demo. So yeah, carry on doing exactly what I teach in the bootcamp. If this is confusing people, I'm going to stop doing it, because people have messaged me in Telegram as well saying, why are you suddenly trading every pair? I'm not. I'm just not showing you what I'm trading on my account. I'm showing you every trade. I thought this would be better, but I think it's confusing people a little bit. So might do a little poll in Telegram. Do you want to see every trade? So the idea of this is we can go onto a chart and go, right, H1, M5, look at the trades it's taken. Yeah, these are the trades we had on this. Lovely, brilliant, 3 profitable trades. Whether you would have taken those trades or not, I don't know, because it depends on your instruments, your portfolio, what you're doing. You know, there's so many variables. So the idea of these accounts was basically to allow everybody to see every trade. But I think it might be making a little bit more confusion than I thought it was going to. So I might put a poll in the Telegram group and see, you know, what do you want to see? If you want to see my stuff, that's fine. You're just going to see 8 pairs traded, nothing more. And I might get stuck in drawdown for 3 weeks and we never see anything exciting happen. But the idea was to see it show everything, but I'm not sure it's working. So let me know what you think, as whether you want it done that way or whether you want the other way, the old way. But, you know, what we'll be doing is I'll be coming in here and going, you know, pound odd. There's an H, or pound CAD, look, there's an H1 RSI extension, which is really good. I'm not going to take it. I'm not going to show the trades. I'm not going to show what would have worked. I'm not going to show it playing out, making a load of money. I'm just going to talk about it every day as if it's something that may have happened, which is kind of what I used to do. But I think this is more educational, isn't it? Showing there's been 2 entries on this because it's being stretched. This is exactly where the break even is. This is how you get in. This is how you get out. This is what you can target. This is how you do aggressive drawdown control. So it's kind of a ongoing educational process with every single trade we can see, basically, which I think is better. But I am getting a lot of confusion from people, and I don't know whether it's because they haven't watched the bootcamp or not. And every time I say, "Have you watched the bootcamp?" when they say, "Why are you trading every pair?" they say, "Yeah, I've watched it." It's like, well, you limit your exposure. Why are you not doing it? So I'm probably not being clear, am I? Every day, actually, I'm probably not saying. I need a disclaimer up here to say this is a demo account taking every single trade available in the ADR reversal strategy. Do not try this at home. I think that's what I need to do. Can we do both? We can do, Adrian, but why? I can't show you every single facet of everything. It's just it's not. I don't know. I haven't got all day. I'll be in here all day. H1M5 killing me with drawdown these 2 weeks. There you go, perfect, Shorten. H1M5 killing you with drawdown. Okay, so this is the H1M5 account, right? If it's killing you with drawdown over the last 2 weeks, this is why I've got this up here, right? If you have taken every single possible trade on H1M5 in the last 2 weeks, your maximum drawdown you're in right now is 6.64%. You've banked 2.36% this month, and last month you banked about 25% net, right? This is exactly why I'm doing it this way. So now, Shorten, you can say to me, I'm in 27% of drawdown, and I can say, let's have a look at your trades, because you shouldn't be in 27% of drawdown. If you're trading every pair, which you shouldn't be, the maximum drawdown you should be in is 7%. Yeah, that's the point of this. Is like if you say you're getting killed in drawdown, tell me why. Because the whole idea is so that you can see how this plays out, how the bootcamp trades and the strategies play out in the real world with every single pair. There is nothing right now apart from Aussie dollar, New Zealand dollar, that you should be in any pain on whatsoever. Everything's just getting banked and it's just sitting there waiting, apart from Aussie New Zealand dollar, which is squeezed. Yeah, so we can look at it on the charts and I can go, right, Aussie New Zealand. Look, this is what happened. New Zealand dollar interest rates went up. The market should have pumped. It didn't. It decided to tank the New Zealand dollar, which made the Australian New Zealand push up. That gave you an RSI extension entry there. And since then, we've scaled in, if you're using 3/4 of an ADR apart like I am, 4 times. Is yours different? If so, let me know how. We can have a look at it. That's the point. This is invaluable. Don't stop. Yeah, that's what I thought. Women post. Yeah, I think it's confusing. Took me a few months before the penny dropped. And I think the missing component is psychology, which isn't evident when looking through your eyes at demo accounts. I'm not doing anything different. Right? What you see here is exactly what I'm doing in my account. I am just limiting my exposure as taught in the bootcamp. That's the only difference. But what I was getting, this is the problem, right? What I was getting from people was, why are you not in XYZ trade? Well, because I didn't take it. Oh, right. What would you have done if you were in it? And I would have said, I would have let the EA trade it for me. So it probably would be in about 2 or 3 trades now. Okay, I'm in 7 trades. My average is here. What have I done wrong? The whole purpose of this here is for that conversation to happen, which is what I was hoping for, and it's not happening. I was hoping to show, to be able to help people like Shorten, who is in massive drawdown at the moment on H1M5, and to help him understand why you're in massive drawdown, because you shouldn't be. That's what you should be in. As a very worst case scenario, if you'd over leveraged yourself with maximum risk on every single currency. Or I could just show you my account, which has hardly got anything in trading in it at the moment. I'm in Aussie New Zealand, and I'm in pretty much that much drawdown. I don't know. Just bring Jigsaw back. Yeah, I'm trading Jigsaw on my other account. That's why I keep looking over to the right here. Because there's a load of money sitting over there. Oh, crap. Sorry, wait a sec. 510, that's good. Right, I've just closed out the Aussie New Zealand lot. Aussie New Zealand. I've just closed out my DAX longs on the opening range break. So I took the pre-market 5, I've just closed it there. There's your 5R target. Yeah. So that was your 1.5. I got stopped out on the trailer there, but on my actual account, I got stopped. I've just closed it. So I've just banked 3,300 on that ORB. S&P's closed out. That's it. So that's all done now. Break-even day. There you go. NAS blowing the roof off? It was. It has. And I just banked it all. Keep it as it is, Lee. People don't like it, then don't watch. It's not so much that, Stevie. I don't mind how I do things, but what I don't want to do is confuse people. I can see why people are getting confused, because what I'm showing here is overexposed. I just assumed everybody would go and would know that this is overexposed and you shouldn't be doing this. I just kind of assumed, you know, we had this conversation, didn't we, the other day? What does assume make? An arse of you and me. I just assumed people would go, oh, well, that can't be his real account, because he wouldn't get overexposed by 5 shorts, would he? On the Aussie. Too much overexposure and a little bit too much trust. I don't know. I can't win, can I? Doesn't matter what I do. Always going to get stick. You pretty much mentioned the VPS at the start of each live stream, so it's fairly obvious now. Yeah, that's what I thought. Anyway, I shall carry on. I set your H1 hedge on the account 4th of April, and it doubled the account minus the drawdown. But yeah, really? I know it's banked a lot. The H1 hedge is killing it, but it's just it's just drawdown. Little bit too much drawdown for me. I just worry about that. It's not something I'm trading live myself, but I'm really interested to see what this does, because this is kind of a little experiment, and I was looking to put this on here with the aim of finding out what the tolerances were before it blew the account. What I'm actually finding out is it hasn't blown the account. It can't blow the account. It only ever gets to about 20% in drawdown. Then it drops back down to sort of 3 to 5 normal tolerances. Then it jumps up again. Then it jumps down again. And it just keeps banking money. So I'm going to give this 6 months live on this forward test. But if this carries on at that, I'd be happy to put some of my own cash into this, because this is easy going to double accounts very, very quickly. I'm just waiting for the Achilles heel. And I've done some more back testing on this H1 hedge as well, and it doesn't blow. I haven't put it on a pair and it's actually blown yet, because it scales out and it gets out of the trade. So the only time I think this will really blow an account is if we get something go totally parabolic for a month or more, which just doesn't happen. It's very, very rare. So we'll see, but I'm beginning to like that one a lot. Shorten, right? Okay, so I think the problem is that I have a large TP, 1 ADR. Spacing between trades is set to half an ADR. Drawdown was 20% at one point last week. Yeah. Okay. So if you are spacing your entries half an ADR apart, obviously you're going to get into a lot more positions. Yeah. So the entries on this account on H1M5 are 3/4 of an ADR apart as a minimum. Yeah. So if you're getting in half an ADR apart and you've got something that's choppy like this, yeah, so we've got lots of up and down movement, you're going to be in probably 6 to 8 positions on this. Yeah. More drawdown. So you need to have done drawdown control faster if you're not letting the EA do it for you automatically. If you're targeting 1 ADR in movement, you're targeting twice the TP that I am using and recommend as well. Yeah. So what you're doing is you're scaling in twice as fast as me, or as the EA that you're seeing here, and you're exiting after twice as much movement. So the plus side for you is obviously you're going to make more money. So if you look at this trade that I put up today as an example, pound Swiss, yeah, I got out of the pound Swiss here, which was half an ADR in profit. It's actually done an ADR, probably. So you would have taken a lot more profit on that trade. But in a squeeze, you're going to get squeezed a lot faster and a lot harder. So use it as a lesson. If you got uncomfortable too quick with the settings that you're using, which is half an ADR apart and 1 ADR target, don't use half an ADR apart. Use 3/4 to 1 ADR apart, yeah, and then target half an ADR. There's no right or wrong, and what I teach in the bootcamp is what I teach in the bootcamp. But different people will use different things. There's different settings that people can use on the RSI. Some people are using different indicators. I've got somebody using a MACD. Use whatever you like. It doesn't matter, does it? We're looking for an overexposed market, so we're looking for something that's stretched. I just think the RSI is the better one to use. But what you've got there, and whether you got out here, is sometimes going to work, sometimes not. There is no right or wrong. Sometimes your half an ADR entries, right, and 1 ADR target will bank 2.5%. My 3/4 of an ADR spacing and half an ADR will bank 0.75%. Yeah. So sometimes you will be way better off than I will. Sometimes I will be better off because I'll be out of that and you might not be out of it. Yeah. Because you haven't hit your target yet. And what it might do is fly to the upside, break that high before it hits your target, which might be there, in which case my way is better. But then I can show you 10 examples of when your way is better. There is no right or wrong. You manage your portfolio and you deal with what gets into trouble. So if you've let it get to 20% in drawdown before you've started to do something about it, I would say you probably didn't do drawdown control fast enough on something. So Aussie New Zealand, for example, that we're in at the moment, I am attempting aggressive drawdown control on this now because it's at 3%. That has got one aggressive on that I just took because it looked like it was starting to come down today, and then as soon as it looked like it was going to break the Asian low, it bounced. Great. But you need to do your drawdown control faster. So I would say maybe go and have a look at the drawdown control again. Watch that part. We've just come down on the NASDAQ back into propulsion. So watch this area for a bounce, play long. Back to origin on the S&P. DAX, look at the DAX. Stopped out. Never mind. So this is potential good bounce point on the NASDAQ. So we're putting in a propulsion candle here at the moment. So looking for it to trade back up into there at least. Dow's coming down. Does that make sense, Shorten? Perhaps a watermark that says don't drink bleach. Yeah, exactly. So exactly, you've kind of hit the nail on the head there, right? It's better this way, as we can observe you do drawdown control. And that's kind of the whole point of this account. This is massively over leveraged. Like with the H4 account, I'm not touching it. I'm not touching the ADR reversal account. I'm not touching the H4 account. I'm not touching the hedging account. The H1 account, because this is the way that I trade, I am doing manual drawdown control on this one because I want to show it. And that's what I did 2 weeks ago, was it? 3 weeks ago on the pound New Zealand. I showed you the aggressive drawdown control playing out live. That's why I did this, because I wanted to show pound CAD, wasn't it? This one here. Yeah, so I wanted to show how to do it. That's the whole point of this. This is not me trading this. This is the way that I trade this, and I was in this trade. This aggressive drawdown control here got us out of the trade. But that's the whole point of it, is to show it all. NASDAQ, the Dow's just broken new lows. NASDAQ is struggling. Let me just catch up on the chat. I think we can put something in the description of the live room. Nobody reads the description, Lusek. There's no point. I just assume everybody's watched the bootcamp who watches me trade. Yeah. So, you know, if you've jumped in, not followed the bootcamp, help. Mumo, I understand your frustration. Seems you need a running disclaimer in the ribbon. Well, that's why I put that up there, assuming that everybody would watch the bootcamp. Everybody does watch the bootcamp, but I don't know. I don't know. I don't know what to do is the honest answer, apart from just give up, go home, and just carry on trading. Anyway, let's do some analysis. About the NASDAQ trades today, do you close shop and stop trading if your daily target is hit? Yep. Straight in, straight out, I'm done. That's it, I'm done. I've just made 328. Done. That's it, I'm out. 15 minutes, done. Basically, what I just took, I didn't trade the S&P. I'm not liking the S&P. I didn't like the S&P on the original ORB strategy. I don't like it on this one either. So I've traded the NASDAQ and the Dow today. I did trade the DAX this morning as well, but I traded it on the NASDAQ. Didn't work very well. So I traded that and I'm out, and I traded that and I got the same result, a break even. So basically 3,228 up. So yeah, but that's it. I'm done. Who needs more than 3.5 grand? If you're trading prop, you stop, you withdraw that money. Don't overtrade. Overtrade will kill you as fast as everything. Everything that goes wrong in trading will kill you. GJ forecast. Right, let's do some analysis. If you've got any ideas on how better to run the live room, let me know. But I just assumed stupidly that showing everything is a good way to go, because it shows what, you know, I can see what people are in as well. Yeah. Somebody out there on H4, M5 is probably sitting in something around about 6 to 7 pounds, 7 to 8% of drawdown on the Aussie, New Zealand. Sorry, PMIs have just come out. Euro US, weak US by the looks of things. 50.3, that's a big miss. We were forecasting an increase, we got a decline. So buy the indexes, sell the US dollar. So Euro US coming up, pound US will be coming up. Okay, just long the NASDAQ. Just disconnected, just as I flick charts, look. Just taking a long on the NAS. There we go. If the US dollar's coming down, indices should rise. That's quite a big miss on the US. I say I'm done for the day, but that looked too good. Let's see if this holds. So there's the gap fill on that propulsion gap that I said. Remember I said should at least trade up into there if we're going to get that bounce. So that's what we just hit. rejecting. So we might get some US dollar. This might be a fake move on the US. NASDAQ's actually, charts are frozen up. I'm on the verge of giving up today. Honestly, charts are freezing. It's just not working. What can I do? I have to change broker, aren't I? This is happening far too often. Look at this. This account, absolutely fine. Trading away, no problem. This account, frozen. It's completely intermittent. I do not know what the problem is with this Forex. I'm not getting this with anybody else at the moment. So it's driving me up the wall. Is anybody else on Forex having this problem? Suddenly come back to life. There we go. Bizarre. I also like watching you do drawdown control because it's that's really the only thing we got to do. Exactly, Lucas. Hello, my dear Brian. Hello, my dear Brian. Buy gold. I'm about to go green. Yes. Position trading rocks. Brian? Steve, rather? There we go. Oh, yeah, that's the other thing you could have done. Sorry. When the US dollar drops, buy gold instead. Or buy the indices or buy gold. One or the other. Make your mind up. Choose one. I'm just really holding on to this NASDAQ trade, so just bear with me one sec. I just want to see if if we break this high, I think we're going to run off to the highs up here. I'm just kind of hovering over the close button because it doesn't seem to be able to get any higher. And the Dow has obviously, as you can see, completely retraced that move. So I'm expecting it to potentially drop. So I'm just hovering over the close button because, there we go, got a bit more movement now. What I don't want to do is give $1,000 back, which is what I've got risk on it. Bear with me. Just going to close that out. Okay. Okay. Another quick $700. Right. I'm with IC markets for a long time. No issues. Yeah. Trouble is, IC markets can't get more than 1 to 30. Can't use that for position trading. I suppose I could use it in here. Lee, for someone starting out on MR, would it be better to use mean reversion? Would it be better to use H4M15 or H1M5? Up to you. How often can you check the charts and how are you trading? Time frames are irrelevant, yeah? So the strategy, position trading, mean reversion, any kind of mean reversion strategy, basically. Any type of mean reversion strategy, it really doesn't matter which time frame you pick. So if you want to go with hourly, right? So look at the opportunities you would have had on the hourlies. Yeah. So you'd have gone long there, you'd have gone short there, you'd have gone short there, you'd have gone long there, you'd have gone short there. You might still be in that short on the NASDAQ, for example. Not that we would trade the NASDAQ with it, but anyway. So you got 1, 2, 3, 4, 5 trades there in a month, basically. We've got some ADRs coming in. We'll look at those in a sec. Switch up to the H4 and look at the last month. So back to here roughly. You'd have had one there, another one there, another one there, another one there, but they're all shorts, look. And look at what's been happening. This is why the H4 strategy at the moment is in more drawdown, because it takes much more movement to get extended and it takes more movement back to get out. What we're getting is a lot of movement up and a lot of sideways, which is meaning that it's difficult to get out of H4. So H4 was always my bread and butter and has been for many, many years. I've switched down to H1 over the last couple of years because we were finding the market a lot more contracted. Since I've been on H1, I've discovered that it's actually much nicer to trade and you get in and out of trades a lot better. But what I was doing was putting my trades too close together, which is what Shorten's just been saying. I was spacing out half an ADR apart. Extending that to 3/4 of an ADR, actually on the hourly, what it does is it gets you into very similar trades to H4, but it gets you in faster on M5 and it gets you out faster with half an ADR as a target. So I think personally H1 M5 is probably the better time frame to use, but it depends if you're trading automated or you're trading manual. So H1 is going to give you more entries, so you're going to get into trades quicker. Your portfolio is going to get exposed quicker. But the problem with it is if you're not trading it automated and if you're trading manually, it's down to the time that you can check the charts. So if you're going to trade H1 M5 or H4 M5 or M15, whichever you want to use, doesn't matter. If you can't check the charts every hour, you can't trade this. And it's as simple as that. So if you work a full-time job, you can't trade H1 M5 unless you can sit at your job every hour and go, let's have a look at the RSIs. Let's have a look at the RSIs. That's why most people start with H4, because you can check this and trade this if you've got a full-time job. You check it before you go to work. You check it in your lunch break. You check it after work. You check it before you go to bed. You wake up. You repeat the cycle. You've only got to look at your charts 4 times a day to trade that strategy. That you've got to look at your charts 12 times a day, 3 times as much. If you haven't got access to charts easily, you can't trade that. Yeah. That's why I focus on H4 during the bootcamp, because most people are working a full-time job, obviously, and they want to be able to start trading and working a full-time job. If you're using the EA, doesn't matter. The EA is going to sit there and take trades for you, but you are still going to need to monitor your exposure. So you need to keep on top of that exposure. 1.71 just banked off of that news. Drawdown now down to 4.5. So yeah, you're going to need to watch this. So again, coming back to the whole thing about having this running on every single pair. If you set it up and run it on every pair, what you would do is you would come home at the end of the day and go, right, what has the EA got me into today? Oh, it's got me into a little bit too much Canadian dollar. Okay, let's find all the Canadian dollar pairs and we need to turn off the EA on the CAD pairs. Yeah, so we don't get into any more Canadian dollar exposure. Let's have a look at this. Shall I deal with this one? US dollar CAD. Oh, it's only 0.07. I'll close that US dollar CAD out so my exposure is correct. Do that twice a day. But you can leave the EA running on everything. Just turn it on and off on the pairs. That's kind of how I think is probably the best to do this now. After seeing and running this on, there you go. It's just banked a load more. Look. So we're up to 2% on the day now. 4.3 in drawdown. A minute ago, we were sitting in 6.5% with hardly anything banked. This is how quickly it moves. This is what I want to show. This is, this is position trading. You're waiting for the news. The whole market revolves around the news. The news is what makes the market move. We need to be in it when the news is moving the market, because that's when we bank our profit. But you're at work while this is happening. So this is the EA. This is the whole purpose of the EA and using half an ADR. It will just get you out and keep banking $500 all the time. And if it doesn't go your way, we'll do the opposite. Sorry, I've just got, whoa, hang on. Why did it do that? I've got a problem with TradeAvate. It's not showing my pending orders for some reason. It keeps triggering orders I don't know I've got in the market. That was close. That just went 8 contracts short on the Dow for me. Did not want to go 8 contracts short on the Dow. Didn't lose any money on that. I just closed it out for $60 profit, but maybe I should have held it. Weird. But yeah, so H1M5, I personally think now is better if you can trade it. but you really need the EA to do it, unless you can check the charts manually every day. The point of the position trading bootcamp was to help people trade this manually. You don't need to use the EA. You don't need to use my indicators. You can just position trade any mean reversion strategy out there. And that's what I say. I give you everything in the bootcamp that I use, my indicators, my strategy, my entry criteria, variations on it. You can mold that to do whatever you want. If you want to use a Bollinger Band strategy or a CCI or a MACD, do it. Mean reversion is completely position tradable. Trend trading, not so much, but mean reversion, any mean reversion out there in the world you've ever come across, you can convert that into a position trading strategy by, when you get the mean reversion signal, just don't put that stupid thing in the platform. And if it doesn't work out your mean reversion and goes up there, you just take the next one. And then you wait for it to come back down again. That's what mean reversion is. All mean reversion strategies are designed to enter the market on extended market conditions, whether that be distance away from a moving average, outside of a Bollinger Band, above a MACD, a stochastic, a CCI, anything you like that's mean reversion. Yeah. So, but the key takeaways of the position trading bootcamp are: do not overexpose yourself and use tiny risk, so that it doesn't matter. When you press that button, you can walk away and go, I couldn't care if I go on holiday now for a week. That isn't going to hurt me. That's the idea of it. You shouldn't get hurt with a position trade. Aussie New Zealand, for example, really good example as well. I've been in Aussie New Zealand and I am in this. The EA is in this. I am in this. I have been in this trade since the 24th of May. We are now on the 5th. So this is what, 1, 2, 3, 6, 7, 8, 9 days straight. This thing has been going against me. Solid, parabolic. Hasn't even looked back at all whatsoever. Worst case scenario, I'm sitting in 2.5% of drawdown. So if I'd have pressed the sell button, put the EA on this, gone on holiday for 10 days, come home today and gone, oh, that doesn't work very well, is it? What's the worst case scenario? I lost 2.5% of my account. That's the whole point, is trying to get people into this mindset and of it doesn't matter if you press the button and you're wrong. But the strategy that you use, the time frame you use, is totally down to an individual. And everybody's decision-making process is going to be based on their comfort level of that. So H4 at the moment, as you can see, which is again why I'm running this, H4 is sitting in 7.8% of drawdown. What was that sitting in at the beginning of the stream? Can't remember. It was over 10%, wasn't it? Were we 10 to 12? 12%. Yeah, we're now sitting in that. 5% drawdown. Disappeared. One news event. Yeah, so, you know, this is, I hope, helping people see what the pitfalls are of position trading, what the advantages are of position trading, and more importantly, when you get into trouble, how do you get out of it? Because that's what everybody wants to know. How do you stop losing money trading? Because everybody in here, and me at some point, have all been losing traders. That's what we want to try to turn around, isn't it? So which strategy you pick, which time frame you trade, is purely down to your job. That was the long-winded version of the answer to your question, which was really short. We've got a load of I'm just paranoid this thing's going to take some trades. I've just made sure I've cancelled all my pendings off. So we've had a load of ADRs just trigger. Let's quickly whiz through those. Aussie dollar CAD, straight up. Aussie dollar's gone up against the Canadian dollar. So we're witnessing basically the US dollar coming down and the Canadian dollar coming down hard. So the CAD will be coming down with the US dollar, as it always does. TP there, look. So Aussie dollar CAD hit to the upside. So this figure that's just come out, the market obviously does not like that whatsoever. So ADR reversals obviously might get a retracement, might not. So just be a little bit careful again with your exposure on these. CAD Swiss, ADR hit to the downside. Again, don't get into anything until you get a reversal alert. You're not going to get an entry on this until it's all the way back up at ADR. Don't get in, right? There's just no, do not try and catch this on the way down. This thing could go 300 ADR for all we know today. So you wait for a signal. That's the whole point of this as well. Stops you getting in oh, this looks good, I'm going to hit the buy button. Why? It's coming down hard. There's a reason for it, because the news has decided that the US dollar should be weakening and the Canadian dollar should be weakening. Don't hit the buy button just because it's come down. Hit the buy button because people are starting to go long. If you don't get a reverse alert, don't take it. CAD yen coming down hard. ADR 125. That's your monthly low as well. Sorry, last month's high. So again, if we're going to get a continuation on this move, that could be it. So it could be a good spot to buy. However, I'd much rather be short in this. Euro pound, we looked at that one already. That's just started to come off. Pound odd and CAD we've looked at. So second position's just gone in on that one again. First entry was there yesterday, pushed down, done some drawdown control on it. We've just had a reversal alert off of ADR, second position taken. M5. Yeah. There's your reversal alert. That's your entry. Distance between those two trades is a minimum of 0.75 ADR. That's 147 pips. ADR on this is 138. So again, another good example. Just because we say, I don't want to get into this position less than 3/4 of an ADR apart, doesn't mean I'm going to get in 3/4 of an ADR apart. This is more than an ADR. ADR is 138, which is there. Yeah. I've said to the EA, I want you to get me in a minimum of 3/4 of an ADR. This is the first opportunity it's had since we got 3/4 of an ADR away from that first position to take a second entry. So that's what it's done. So there's the average. All I'm needing now is a little bit of a half an ADR push up and I'm back into break-even territory on it. I'm getting out half an ADR above there, which is 69 pips. So for me to exit this trade, price needs to get to that level there, which is 125 ADR to the upside. Yeah. So if you look at that on an hourly chart, what some people are doing, entirely up to you, is they're targeting propulsion gaps instead of exits at a specific level. So that is the obvious closest propulsion. So that is 150 ADR. My exit at half an ADR is 125. Yeah. Above my average. Yeah. Half an ADR above my average is there. Propulsion target. You could use that. Again, totally up to you. The whole purpose of the bootcamp is to show you how to get in and out of the market. When you get out, there is no right answer to that. Yeah. This thing could fly all the way above that high and go completely parabolic. You could get 6R out of this, 6 ADR. You can make an absolute fortune if you can hold it. Again, I don't teach people how to get in, get out, hold, whatever. I teach people how the market moves and how to get in and out of the market. Up to you if you want to target that or you want to be cautious and get out there. What I like is this. I like green. I just like green all the time. I don't like lots of red. I find personally, and this is me, if I hold out for things like that, what market does is it does that. And I'm not good at holding through that. So I get out at the wrong point. So I've come to the conclusion it's better for me just to be mechanical and get out there. And if it does that, brilliant. Well done, everybody else. I got out and I banked what I need to pay my mortgage. That's it. Yeah. That's me anyway. Obviously, everybody's different. So pound odd, that's an ADR. Pound CAD, sorry, that was one we just looked at. Pound Swiss is also now hit. Again, this is coming down. So we got some Swiss franc strength coming through. Yeah, again, so what I keep saying about the US dollar, when money flows out of the US dollar, it usually flows into other safe havens, yen, Swiss franc. Swiss franc is powering up because the US dollar is weakening. So you'll find all the Swiss pairs will be pushing and all the yen pairs are pushing. Therefore, the Swiss yen is doing what? Going nowhere because a strong against a strong is a sideways. But you'll find all the other Swiss franc pairs will be pushing hard and the market will be coming down. So again, be careful of these. If this is a run to safe havens because they don't like these PMI figures and they're going to start scaling out of the US, this could come all the way back down to here before it decides to have any kind of bounce. So just be careful. Swiss franc longs expose yourself twice. If you expose yourself 4 times, it's twice as much risk. Don't take all of these pound ADRs. Pick 1 or 2. If you've got exposure on it already, you ain't trading any of them. Simple. Yeah, follow the rules. Pound Swiss bounce potentially off of these highs. So we're coming down into weekly highs. That's 2 weeks ago. That's last week. Good spot for potential limit orders. People will be buying the highs of the week. So we find some limit orders trigger. The market will push up. But if this is going to be a continuation to the downside, there's a funny head and shoulders there. Very mechanical looking head and shoulders, but it is. It's a bit of a, it's a Batman, isn't it? It's a Batman head and shoulders. It's actually worked for a change. They don't usually. It's probably because it's got Batman in it. But anyway, yeah, pound Swiss. So there's an ADR reversal opportunity. Again, drop down M5. If you don't get an entry by the end of the day, walk away. Yeah. So if this thing now sits like this, and by the end of the day, it hasn't given you that reversal alert, move on to the next. It's not a trade, not an entry. Exactly what the EA will do. The EA is going to monitor this for reversal alerts now until the end of day. When the end of day hits and it resets the ADRs, starts again. ADR from yesterday happened. We haven't triggered an entry. We haven't got an ADR now. It's a new day. Start again. Yeah. And pound yen. Again, money flowing into the yen. Off the back of this, we're down at the lows again. Potential bounce point. Pound is a strong buy at the moment. Yen, I would say, probably is quite a strong buy now as well. So at the moment, but this could be a nice bounce. You've got support coming up there and a support coming up there. Again, going back to the bootcamp. Obviously, when I recorded the bootcamp was years ago, when I was mainly mechanical, manual trading. So in this case, I would be saying in the bootcamp, get in when you get the reversal alert here, plan your entries. So your next entry from here needs to be a minimum of a half an ADR apart. You're probably not going to get one there, but that is the next bounce point. If that bounce point doesn't work, look for the next bounce point. Where's your next support level? There. Yeah. Previous support becomes resistance and support again and resistance again. Really strong level. So if you get in here and this doesn't decide it wants to go long, your choice is, do I get in here with a second entry? If so, that's close together, isn't it? Half an ADR. So if it doesn't work out, that second entry, that's where you're going. So take a third entry there. Or get in there, get in on a reversal alert if you get it somewhere in this gap, and then make sure you're getting a third one there. 1, 2, 3, out. If it gets all the way down to there without having an exit, you're going to get a nice big snapback of that elastic band, and it's going to ping back quick. Euro Swiss has just hit ADR as well. And US dollar Swiss. So Euro Swiss, again, the Swiss franc powering up very hard, coming down hard into propulsion. Just about to get a reversal alert on the hourly there as well. Bit of a messy one over 3 days, but it is a reversal. And US dollar Swiss. Potentially, maybe not. But there's no way into that at the moment. Yeah, you're not going to get a reversal alert on that at all today. All the way up there. So the only way you're going to get reversal alerts on these now is if this pushes down, pushes up, gives us a green candle, then makes a new low, in which case then your support rectangle is going to drop down onto there. That is where your entry will be. That's fine. I wouldn't mind taking that. But that isn't something I want to take as an ADR reversal. That was busy, wasn't it? There we go. There's a load of ADRs just gone off. Let me just catch up on the chat. My robo is running fine. I'm on ECN2. Yeah, I'm on ECN2 as well with my live. But I'm also finding odd connection issues every now and again. I'm starting to wonder if it's my machine, my PC. I'm not experiencing this with my Forex funds though. So, I don't know. Afternoon, Kennelly. Burke, I think it's completely personal. I have time but I'm using H4M5 because it's much more accurate. Well, you say that, Burke, don't you? But look at the accuracy here. This is H4M5 minus 1.69% in sitting in 7.6. This is H1M5 sitting in 4% profit and 3.9% drawdown, which is more accurate. However, go back 2 months, this performed worse than H4M5. Again, there's no right or wrong. There's no strategy that's going to work better. We've had months with ADR reversals where it's banked 25%. Not doing it this month. We're flat at the moment. Well, we've done 2%. We're pretty much flat on the strategy, but it is going to be different every time. And again, it's a question I get asked all the time in the Telegram group. Which is the best trade? There is no best. There is no way of predicting the future. There's no way of saying whether the past is going to happen again. And there is no way of getting the best strategy. You get in, you get out, and you deal with what you get given. If you get given a load of crap because you've chosen H4 instead of H1, tough. Nothing anyone could do about it. It's just what you've been dealt. You have to deal with the cards you've been dealt. And this is the whole purpose of this Trade Manager dashboard. My cards at the moment are showing this and that. Brilliant. What I can do is close the whole lot out right now and walk away with zero and go, oh, well, this was a rubbish week. Didn't make any money, didn't lose any money. However, I don't do that. But, you know, that's the point. You deal with what goes wrong. I'm dealing with Aussie New Zealand. Have you seen me even bat an eyelid about any other trade that's happened over the last week? I haven't even... All I ever do with my other trades is go in and go, we've closed that out. Look. Yeah. That's the only time you'll hear me comment on any trade in here. Pound Swiss closed out today. Didn't touch it. Literally, EA got me in, EA got me out. Didn't touch it. Haven't even had to talk about it because it's just done exactly what the strategy is designed to do. Scale in on extensions and get out when they profit take the move. Was it a crappy exit? Yeah. Do I care? No, it made money. Could have milked loads out of it. But what would you have done if it had gone like that? You hadn't got out there because you were targeting that and you'd gone into 7% of drawdown on it. You'd be cross. And you predict whether it's going to do that or that? No. You get out with money. That's it. But yeah, so all you're hearing me talk about at the moment is Aussie New Zealand. And I have been for the last week because that thing is squeezing. I concentrate on what needs to be concentrated on, which is this. If the Aussie dollar rates tomorrow come out as flat, they do not increase those rates, and the rate statement comes out with no interest in increasing interest rates over the next month, we will see what the data says. Aussie dollar is going to come down. I'll be out of this. This 2.2% today will be flat by tomorrow morning's live stream. If they come out and increase the interest rates instead of doing nothing, this is going to be I'm going to be stopped out with another 1% loss, probably more, like 2% to 3% loss. And this thing's going to go parabolic to the upside. Deal with it. Nothing you can do to affect it. There's no way that we could tell that the New Zealand dollar was going to weaken on high interest rates. Should have been the opposite. Market decided the opposite. Nothing you can do about it. You just deal with it. Look, I've been dealing with it all the time, taking losses on it. Scaling out, keeping this under control. That's what drawdown control is for. Keep this under control. Let everything else get banked. We'll deal with this later. If we want to, you can shut this now and take 2% loss and just be on 2% profit this month. And be in 2% drawdown on everything else, which is just waiting for stuff to happen. Yeah. Hopefully this is becoming clear. This is why I'm doing this. This is why I've got this taking all the trades so you can see everything. This is the whole point of it. You don't get to see all the squeezes. If I don't get into a squeeze because my account hasn't taken those trades, we never get to see this stuff. I am actually in this one, but if I'd had too much exposure on the Aussie or the New Zealand by the time this trade came up on the 25th of May, we wouldn't be watching this now. Wouldn't be looking to try and get out of it. Wouldn't be trying to get drawdown control done. You wouldn't be seeing the losses. Yeah, we wouldn't see this. This is what we looked at this morning. Look. Broker stopped me out there. Price was down here. Yeah, this is all stuff that happens in the real world. Yeah, I took a 0.75% loss on the account because they triggered my stop loss there. when the price was trading down there. It hasn't been there all day. This is stuff you only see if you actually get into stuff, get into everything. Right, there's all your ADRs. We haven't even covered the RSIs yet, but we have covered the RSIs in effect because they're all extended basically on ADR pretty much, all we've looked at already. So, Lucas, as far as exposure goes, I was planning to do this. Pick a bunch of pairs where I never have a currency repeat more than twice, put the EA on them and monitor for drawdown. So that's what the signal is doing on the website, yeah? So the signal on MQL5 is doing pretty much that. Oh, there we go. Yeah, so this is the signal for H1M5. Yeah, been running for 84 weeks, 200% return. This is just trading these pairs. Yeah, you can see what it's trading. Yeah. So Aussie CAD, Euro CAD, Euro Odd, Aussie US, Euro New Zealand, New Zealand US, Aussie New Zealand, US CAD, Euro Pound, Pound US, Swiss Yen, and Euro US. Yeah. So these other pair, all the other pairs basically, there's 28 pairs. It's trading 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Trading 12 pairs. So less than half of the pairs. The whole idea of this is to do exactly what you just said, Lusak, is to limit the exposure. It will, however, still get overexposed, but not fully exposed 7 times, which is what the maximum it could be. Yeah. So if you look at it, we've got euro there, we've got euro there, we've got euro there, we've got euro there, and euro there. So there's 5 euros. US dollar, US dollar, US dollar, US dollar, US dollar. 5 of those. Canadian, 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 3. Yen, we've only got 1, which is the Swiss yen. Swiss franc, we've got 1. I think there's only 1 Swiss. Yeah, 1 Swiss. And then the pound, we've got 1, 2 on the pound. Aussie and New Zealand is, I think, 3 or 4 each. Yeah. So the maximum problems you can get into is on the euro or the US dollar. And that is if they squeeze fully in one direction and every other instrument at the time of that squeeze is weak. Yeah. So if you get the euro pushing hard and the US dollar pushing hard, you will not get into the euro US dollar because it will not get extended on the RSI. So you can knock one off of both of those. You're only ever going to get into a maximum exposure of 4. Yeah. On these ones, you'd need everything to push hard at the same time to get into all of those. So the idea is it keeps the exposure limited, but it will still every now and again get exposed on all of them. I'm not sure if it's actually got live exposure you can see on here, is it? Doesn't give you the proper exposure, does it? But you can see it's in, so this is the current open positions on it. Look, it's in Swiss yen and euro odd. That's all. And it's got 8.3% of drawdown. No, it hasn't, because it's a smaller account. So yeah, it's sitting in a fair bit of drawdown, isn't it, at the moment? This is trading slightly differently. It's not doing automated drawdown control in the same way as I'm doing at the moment. But yeah, so you can do that. You can stick it on just a set amount. The trouble with that is you're going to miss opportunities. So if you say, for example, I'm only going to trade euro, US dollar, and US dollar CAD. If the US dollar Swiss has the perfect setup, right? So if you look at the US dollar Swiss and you go, let's say, for example, we saw that as a beautiful resistance. And you see that and it gets extended on the hourly and you get a 5-minute reversal and it's like, that's spot on. I'm not going to take it because the EA is not running on it. You just missed all that profit. Actually, I took that trade. Look. Just happened to have taken that one. Look. Bang, bang, in at the end of New York, out by the end of London the next day. Yeah. Perfect. But you didn't take it because you weren't running the EA on Euro Swiss, on US dollar Swiss. Yeah. So there's no right or wrong, but you will miss a lot of opportunities if you limit your number of pairs. And what you also run the risk of is, don't forget, we need profit to pay for drawdown. So if we have stuff that is getting out of control, we need profit to do drawdown control. If you start your trading career off as a position trader and you set yourself to only trade 10 pairs, for example, and out the bat, week one, you get into those and 3 of those go into a little bit of a squeeze for 3 weeks and you never get any profit banked, your experience of position trading is not very happy, is it? However, if you'd have taken all the other trades, you'd have banked 12% along the way. You just didn't take those ones. And it's the same old thing with any strategy you trade with a stop loss, isn't it? People always ask me, what's the strike rate of the market reversal alerts indicator? I don't know. Which trades did you take? When were you awake? When did you get the alerts? Were you busy making a cup of tea? Were you trading H1? Were you trading M5? Were you on holiday that week when it made that 10 to 1R? No idea. Same with position trading. Did you catch that US dollar Swiss short? No, why not? Because I had double exposure on the US dollar. Good. You shouldn't have been in the US dollar Swiss short, should you? However, if you didn't take the US dollar Swiss short because you were waiting for Euro US dollar to set up, you missed all that money. Yeah. This is what I kind of say in here all the time. There's no right, there's no wrong. There's no way of determining whether you're going to make money or not make money, whether you should be trading this, trading that, which is the best time frame. Just get into the market and deal with the positions that you get into. You will find that you will just make profit because all you're doing is you're giving the market an opportunity to give you some money. Whereas if you're over analyzing and thinking, should I or shouldn't I put it on this pair? When that pair sets up and does a trade like the US dollar Swiss, you're going to miss it because you decided not to trade the US dollar Swiss. But whether you set up every EA, every pair with the EA, and then you manually turn the EA off, or whether you wait for the alert dashboard to go pound odd is extended and you go, yep, like the look of this, open up the VPS, put the EA on that and say, go long for me, the next reversal alert, and then keep scaling in position for me, is entirely up to you. I can't tell you because I don't know what hours you work, whether you've got access to your PC, your VPS during the day, and I don't know if you can check the hourly charts every hour. No one's the same, are they? So again, I can't advise everybody on an exact. I've had a lot of people over the last couple of days getting in touch in a lot of confusion with a lot of stuff. And I think it's because of what I'm doing in here. This is confusing people, which I can understand. But the whole point of me doing it was because I wanted to try and demonstrate everything. But that's obviously not the way forward. Anyway, does that answer your question? Hopefully it does. How many % of the account balance do you have it set for? Yeah, so everything is set exactly the same. It's 0.25% risk over half an ADR. Always is. So the set files are all published in the Telegram group and the blog and everything. So the risk is 0.25%. The distance for each stop loss is half an ADR. That's it. Lot size multiplier is 1.3. Drawdown control is being done. There you go. Distance between trades is half an ADR. Exit in money is either $500 or half an ADR, whichever comes first. Drawdown control is being done at 1 ADR with 1/3 of the position. So idea being is we get into our trade. If that doesn't work, ideally we move 3/4 of an ADR, get into a second trade, which does work. We exit. If it pushes 1 ADR against us, we scale out of 1/3 of that position and wait for the next reversal alert, which means that that is a smaller position than that one. This is also multiplied by 1.3, which brings our average really close so we can get out with half an ADR really quickly and easily. That's the idea. That is obviously not what happens, as you can see from the Aussie New Zealand, in all instances, but in most. XRupdate.news. Finally, the day is finally here. For what? You're late. Afternoon, Leo. I downloaded the Lee set from the Telegram, and they don't seem to have drawdown control or TP turned on. Yeah, that's exactly what I've put in there. Yeah, that's these ones. Yeah. They're all in the Telegram group. Mumo, for the ORB EA, what's your target percent daily profit? Does the EA allow settings? I don't use a target percent daily profit. I use a risk reward ratio of 1.5R and 5R. So same as here, basically. So looking for 1.5R on one trade and 5R on the second trade. I don't go for percentage return. The back testing that I did with the ORB. So if you look at the ORB EA, you've got the setting in there for you can target a percent profit, yeah, which is whatever you want, or you can target a monetary amount to hit as well. The problem with that is you're limiting your upside. Yeah. So when you're taking any trade that uses a stop loss, if you get into a trade and you put a stop loss in it, you're limiting your risk, which is exactly what you should be doing. If you're limiting your upside by saying, get me out at 1%, and this thing decides to go 5% today, you've limited your profit. So I don't use an upside limit. The idea between the 5R is that's the runner. The 1.5R is if we hit 1.5R, get me out with one of those positions, which pays for pretty much 2 losses in the opposite direction. If you can get a runner, brilliant, get as much as you can. Sometimes it goes beyond 5R, that's absolutely fine. But 5R, I find, as we saw on Friday last week, yeah, so the 5R target is there, look. Was that Friday last week? Hang on a minute. I've gone too far. I can't remember. Oh, that was Friday, wasn't it? Yeah. So your 1.5R, something like that, your 5R up there. 5R really on that first 15, 20 minutes is all you're ever going to get before you get a pullback. And I want to use a trailing stop just to limit the drawdown. So 5R, I think, really is kind of the maximum money you'll get. You'll get the odd day like we had on the DAX when the euro was closed, where you just get a 15R in 2 candles. It's just not going to happen often enough to worry about it. So it's a scalping strategy. The opening range breakout is a scalping strategy. So the 5-minute ORB and the pre-market ORB, that move is done usually within 15 minutes. The opening range, initial opening range is then in. And if it's going to trend for the day, fantastic. But you're probably not going to get much more than 5R out of it. And obviously, bear in mind, it does matter what the initial open is. If you've got a big wide open before the market opens, or you get a massive 5-minute opening range candle, it becomes a lot more difficult to get 1.5R, because 1.5R of that is obviously up here somewhere. 1.5R of that is only there. That's a lot easier to hit than that is. So, you know, and again, there's no right or wrong, is there? It will do what it does. The idea of the strategy is to let it run and let the edge play out. DAX is just testing the highs of the day. Michael, what is the advantage of ADR versus ATR? It's the same thing. So ADR is the average daily range. ATR is the average true range of the time frame you're looking at. So the difference between ADR is, if you see the ADR lines here at 188, 582, regardless of what time frame I go to, ADR is the same price. Yeah, it's the average daily range. If you're trading by ATR, you are using the average true range of a number of candles. So ADR 10 measures the average daily range of this instrument over 10 days. ATR 10 would give you the average true range of the last 10 candles on the 15-minute chart. When you change to the hourly chart, the ATR of the last 10 candles is going to be different to the ATR of the last 15, M15 and M5 and H4. They're all going to be different numbers. So ADR is calculated virtually in the same way. However, my indicator calculates using yesterday as the start and then counts back 10 days. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Whereas ATR calculates it from where we are. Yeah. Because ATR will move up and down on this candle. So if you get a new spike, your ATR will be wrong. As far as I'm concerned, I'm interested in what the average true range has been, not what the size of this candle is. I don't want to measure it that way. A new spike like that is going to throw your ATR out. Look at the ATR of these and look at the ATR of that. Totally different. You can't use the current candle, use the last X candles. So all it is ADR is the ATR of the daily chart. Yeah, using yesterday as the start point. And obviously the whole reason we use ADR instead of pips is because it's dynamic. Yeah, if you're using a strategy, you know, most people teach you a strategy based on using a stop loss, don't they? So they go, right, when you get down to a support level, you go long and you put a 20 pip stop on it. Yeah, a 20 pip stop on something like the euro pound is half of its average daily range. A 20 pip stop on the pound New Zealand is where it's 177 pips, is probably a 5-minute candle. Yeah, so you're not going to put a stop loss on the pound New Zealand the same as you are on the euro pound, are you? Because for it to hit that, it's going to take half of its average daily range of movement. For it to hit it on that one, it's going to take one 5-minute candle. So you use a stop loss based on the average daily range of the instrument that you're trading. The oil, for example, 24. Yeah. So if you're saying I'm going to go long on oil right now, you're going to put your stop like that far away, whatever its average daily range is, you wouldn't do that. If you're on the 5-minute chart, you're not going to put a stop a day's movement away, are you? You're going to, or if you're scalping 5 minutes, you put the stop underneath the low, or you use the average true range of the last X number of candles. So I only trade everything based on measurements of average daily range because I know that the market spends most of its time sitting within its average daily range. So I want to target things within that average daily range, and I want to put my stops outside of that daily range if possible, because if it's going to move up and down in its daily range and you put a stop anywhere in there, chances are it's going to get hit. Put it outside of it, it's not. If you target targets within its average daily range, you're going to get them hit. If you target targets way above the average daily range, it's going to take a lot of movement in your direction to get there. So if you use ADR, you know, first of all, when something is beyond that, so there's an opportunity to get in the opposite direction and mean revert it. Or if you're in something, for example, if we're in long, for example, on the pound odd, and this thing flies up to here, i.e. it's moved 100% of its average daily range up, if I'm in profit, I want to take it off, because if it spends 58% of its time in its average daily range and it's hit its average daily range, it's unlikely to move further. It's more likely to pull back. So that's where I get out of the position. The ADR gives you a much bigger insight into how the market moves when it's got beyond where it should normally go to. So you can look at it and go, right, well, we've hit a support level and it's moved beyond its average daily range. And we've just had a bull candle put in. We're about to get a reversal at. Looks like a good long opportunity. Whereas if it hadn't hit its average daily range and it hit support level, you might think twice. Just another string to your bow, another way of looking at it. So just to be sure, the 1.5 to 5 hour target return for the ORBA is defined as cash values in the settings. No, it's defined as a percentage of the average daily of the range. Yeah. If you're using the opening range breakout EA, yeah. So I'm risking $500, yeah, on 110% of the opening range. So, for example, this OR1 here, it would place a pending order there, stop 110% of the opening range, and it would risk $500. My TP on the first position is 400, for example. So what it would be set at is 150, 500. So it would take 2 trades. One of them would be 150% of that range. The other one would be 500% of that range. Your money, I risk $500 on that range twice. So my risk per entry is 1% on a 100K account or $1,000. Yeah. So when I get to TP, we've got some ADRs going off. Euro Swiss and Pound Swiss 125 ADR. Swiss franc still pumping hard. So here, for example, look, you can see the TPs, look, yeah. So that is the pre-market, it's moving up the chart. That's the pre-market 5 opening range, yeah. Pre-market 5, the 5-minute pre-market range. We took 2 trades. First TP, 1.5 hour. Second TP, 5 hour. One and a half, 5. Yeah, my risk is based on the range. It doesn't matter. It risks $500. Worst case scenario, if this range was that big, it would risk $500. If it was that big, it still risks $500. It just adjusts the lot size depending on what the range is. That's the way the ORB's always worked. The new version works exactly the same way. It's a risk based on range. Again, no pips used. There's no point in using a pip value here because if the range here, let's say for example, we've just had non-farm payroll like on Friday. The opening range on a non-farm payroll day is going to be totally different, and so is the pre-market to a normal open. So you do not want to use a pip value or a specific value in points when the range is different. Yeah, if you've got a range like that, because the market's volatile as hell, you do not want to use the same lot size as if the range is that, because you're going to get absolutely slaughtered if you use the same lot size. Like this one here got into 250 pip lots. Yeah, look, 200 lots on the S&P. The Dow, we used 18 lots. We used 35 lots on the NASDAQ. We used 23 lots on the Dow. But the risk is exactly the same. We lost $1,000 on the Dow. We lost $1,000 on the S&P. We made $2,000 on the NASDAQ because it hit target and got stopped out on a trailer on the second part of it. If it had got to there, we would have made $3,250, which is what I made over there because I didn't use a trailing stop. Make sense? Everything you do in trading, again, bootcamp, day 1, first lesson. We do not use pips. How to measure success. The first part of the bootcamp is called How to Measure Success. We kick off with a look at how to measure your success as a trader and why you should not use pips for that, or indeed for anything. Pips are totally useless. You work with the instrument you've got. The instrument you have has a range of movement. That is what you use for everything you do. Your targets, your stops, your lot calculation, everything has got to be based on how this thing moves. Bitcoin moves 10,000 pips every 5-minute candle. Oil might be lucky if it does 1. You cannot use the same risk parameters on those instruments. You use the risk parameters specified by that instrument. Some things move fast, some things move slow. Afternoon, Marco. Maybe dumb question. Does FVG make sense in higher time frames? I don't use FVG. Watch the bootcamp. I don't use FVGs. Propulsion gaps is probably what you're talking about, but no. I use hourlies for propulsion gap targets, not anything else. And I don't think this is what you're calling an FVG. You're obviously an ICT student. I don't think this is what he classes as an FVG. I don't know, because I just couldn't be bothered with it all. It's all too overcomplicated support and resistance at the end of the day. So I don't know. There's a really good video, actually. For those of you that don't or do know, Nick Shawn from Mission FX Trading, right? On Friday, we had a conversation about this because somebody, was it Thursday, I think? One of my old students came in and started talking about how he'd gone off and he'd done a position trading boot camp, doing really well, went off, system hopped as you always do because it didn't maybe go his way, came back doing something else. All ICT stuff, smart money concepts. And I said at the end of the day, and I always will say, smart money concepts, what are they basically? Support and resistance. Guy from Mission FX put out a video at the weekend where he was in his live room with his guys saying exactly the same thing. He got asked what smart money concepts were, and basically it's a range. It moves up to the top of a range. If it moves up to the top of a range and comes down, it's a smart money reversal. No, it's not. It's a bounce off of a range high. Support resistance. It's been around for over 100 years, support and resistance. Put the word SMC up here and call it a stop run, or what did he call it? Buy side liquidity, is it? Call it a BSL? At the end of the day, if it hits that monthly resistance and bounces off of it, it's because the limit orders the banks have placed at that level have triggered, and there's more of them than there is buyers. Sorry to poo-poo you FVGers, but it's just another word for something we've known about for many millennia. Anyway, enough of that. We've talked about that before. But if you want to go and watch Nick Shawn's, it's very funny. He's a lot, shall we say, more aggressive in his stance against smart money concept traders than I am. I just get fed up with everybody saying that this is all smart money concepts when it's got absolutely nothing to do with it. But it's funnily enough, it all looks very similar because it's stuff that people have invented that smart money concept traders have taken and called something different. Wyckoff, how do you think he feels about ICT? Oh, the Wyckoff Spring. Oh, you mean a sell-side liquidity buy? No, it's a Wyckoff Spring. Wyckoff invented it 40 years ago. Calm. Pound Yen RSI extension and Pound Swiss. So we've got some more RSIs. We haven't covered the RSIs today, but they're all pretty much the same thing. So Lusek, the FVG breaker block, blah, blah, just a bunch of jargons for support and resistance. Exactly. What I think what they're trying to do with smart, if that is what smart money concepts are, which I think they are, which is what they're based on. But there's other people selling smart money courses, smart money concept courses that have nothing to do with that. They just call it smart money concepts because they think they're more clever than the banks, which is lovely. If we were more clever than the banks, we'd be making more money than the banks. Funnily enough, we don't make more money than the banks. So who's clever? Who's smart? The bank. So, but yeah, basically it's all just the same stuff. It's just over-engineered. So what they've done in smart money concepts is they've taken support and resistance. Some people are now calling it supply and demand. And they've put in the mechanics that appear in here, which is basically price action at support and resistance, which is a concept that has been around for a long time, taught by pit traders back in the 40s. Yeah. So what they classed as support and resistance, bear in mind they were reading the ticker tape, yeah, was previous levels price has found liquidity at. Yeah. Price action at support and resistance. Price found action in the opposite direction at a level that has previously been a turning point, resistance we'll call it. Yeah, so all smart money concepts do is they just over-engineer something very simple. If you see a level caused by a turning point, that becomes a weekly or a monthly support resistance. All these lines drawn on by the indicator. When it gets back to there, the people that bought it here don't want it to go further than that because they bought it here. When it gets back there, they buy it again. Yeah, same as they sold it there. And when it got back there, they sold it again. When it got there, they sold it. When it got back there, they sold it again because they sold it there. This is nothing new, and it's not smart, and it's not a concept. It's just support and resistance. I've been trading support and resistance for 15 years in one shape or form before the words YouTube were even invented. Smart money concepts didn't become popular until people decided to make videos about them on YouTube today. I knew about it a long time ago. Didn't even have YouTube. But I'm old. Anyway, I'll leave it there. Yeah, everything's kind of got a bit haywire on the US dollar. We've potentially got some mean reversions on this. However, we'll see what happens with this US dollar. Probably not the best thing to look at. Euro US dollar is the best thing to look at for comparison. So US dollar still weakening at the minute. We're still getting some strength. Obviously, we've got some strength overdue against the US dollar. So this might be it starting. We'll see what happens. But just be a little careful with your exposure, obviously, on the US dollar. Don't get overexposed on it. Yeah, I meant propulsion gaps. We answered, yeah. Yeah, again, I don't know if this is I don't know. ICT traders will have to tell me what an FBG is. I have briefly done some ICT stuff, and obviously that's his terminology, isn't it? FBG, a fair value gap. I don't really know what the mathematical calculation of it is, but at the end of the day, that is a propulsion gap. It's a propulsion candle, a larger candle than the previous candle and the candle that comes after it. Yeah, meaning that those two didn't touch and we have a gap, propulsion, move, impulse gap, you can call it. Call it what you like. It's a gap where we only traded in one direction. I don't know what his definition of it, whether it needs to appear up here or down here, or whether it has to have done something before it appears. My indicator doesn't do that. It literally just draws in impulse candles, which is the same theory behind wide range bars invented by Mr. Perry. Again, I don't know whether it's the right definition or not, but you could probably tell me. Okay, I will leave it there. Anybody needs anything, let me know. I'm going to be in the Telegram group, obviously, as usual. Just watch, obviously, everything that's moving at the minute. We've got lots of movement. Aussie, New Zealand's still not doing anything. Thinking about it. So we have got a nice rejection of last week's high today. Really need this to move, though. But bear in mind, it's all going to happen tonight, overnight. The cash rate comes out 5:30 tomorrow morning. So that's kind of 2.5 hours before Frankfurt opens. So that's when the Aussie is going to get its movement. If it is, there's a good chance we might just get a whipsaw on it. I don't know. But the weakness that we've had in this Aussie of late, as you can see, they have started to push the Aussie up. So it is kind of due a retracement and potentially a continuation. I don't think the market's going to be very happy with the 3.85, but I didn't think they were going to be unhappy with the Euro and New Zealand increase, and they weren't happy with those. So the fact that I think they're not going to be happy with that means it might well go through the roof. I don't know. Doesn't seem to be making any sense, interest rates at the minute, but we'll see. But bear in mind that tomorrow. So if you've got any Aussie dollar before you go to bed, or before that news, if you're in the US or wherever you are, that is in profit, you might want to get it in the bank just in case. Worst case scenario, if you bank it and it goes further in your direction, you've made money. Worst case scenario, if you don't bank it and it goes against you, that money you could have banked is now drawdown. You've got to deal with it. So anything you've got in profit, probably worth sticking in the bank. If everything starts to go your way, not a problem, is it? If it goes against you, becomes the bigger problem. So just deal with it. All right. So that's all for today. Anything you need, let me know. I will be in the Telegram group. Back tomorrow morning, 7:50, same time for the Frankfurt session for DAX, and 2:20 tomorrow afternoon for New York. If you've got any opinions on how I should be showing things in here or any ideas, because I don't want to confuse people, let me know. But I kind of want to take every trade so that we can see where everything is and how everything's doing. Kind of best case scenario, worst case scenario, yeah? So if this blows the account, it's a really good explanation of how exposure helps you, isn't it? If it just continues to make money, we can turn around and go, screw exposure. Lee was wrong about that. Trade everything. I don't know. It might happen. I don't think it will. Not from my experience anyway, but you never know. Okay, back tomorrow. Anything you need, let me know. Otherwise, I will see you guys tomorrow. Have a good evening.